Thanks for coming in, Zach.
Thanks, Cartrack.
Good set of numbers to come to the market with.
Thank you very much. Yes, I agree. The numbers are good, perhaps acceptable, perhaps room for improvement, but we're happy. We're very content.
Well, when you hear most people who come to talk to us, and CEOs I include in that particular lot, they speak of a difficult macroeconomic environment, a tough environment for consumers, and yet you seem to have found some ways of boosting subscriber growth. Let's talk about how you're able to do that.
Well, I think there's generally speaking, there's a good demand for our services. Also, in terms of the value we offer for what we charge, it's really value for money. If we look at what we were charging 15 years ago, it's the same price as we're charging today. So effectively, our price is 60% cheaper than it was 15 years ago. And our services today, what you get is substantially more than you used to get for it 15 years ago. So it's a really value for money proposition and very affordable.
Sustainable in terms of the numbers that we have seen here, up 28% subscriber growth?
Well, we certainly believe they are, but we can't say it will be 28%, but we certainly believe double-digit numbers. We will definitely achieve them in the foreseeable future.
And the environment that we're getting into, when you speak to most businesses, they will say it's extremely difficult because, one, you have a high indebtedness amongst households. At the same time, you're also talking about an environment in which potentially interest rates may well increase. And then you look ahead further, what do you see? You see elections. When you yourself look further out, what do you see?
It's undoubtedly lots of difficulties. I think the economy, especially in Africa, very, very depressed. I think South Africa, the consumer is definitely feeling it. I think our ability to collect subscriptions, we're investing currently a lot in it, in our ability to collect. We've got new platforms, we analyze data. So it's definitely a tougher environment, and I believe it will get tougher before it gets better. But I do believe the services are still required in this tough environment. So I still see growth even in this tough environment. In actual fact, I believe we'll still get accelerated growth.
Talk to me about your ability to be able to generate, what do you call it, that income?
Annuity income.
Annuity income. Yes. Annuity income. And why that's important for the business going forward?
Well, our business model is actually to service customers. So, we get customers to subscribe to our services, and they pay us on a monthly basis for the services we render to them. And that's actually our business model. We're a service provider with a bundle of different services that we provide to the consumer and to business.
And we're getting into an environment where increasingly we keep talking about like it's coming, and yet some people would argue it's already with us. This Internet of Things, and these machines that have the ability to be able to think like us, and some people suggest that those things may well be able to think even better than us. How do you see yourselves benefiting?
Well, the Internet of Things is actually quite fundamentally, it's become a buzzword today. But in reality, it's been around since the 1990s.
Oh, really?
It's
the dot-com bubble.
Well,
is that what you're saying?
Well, there is a dot-com bubble in 2000, and bubbles will come and go. And that's the reality of it. Now, that could happen again, but the Internet of Things is an old concept. It's clearly getting much more momentum, and it's a buzzword at the moment. But connectivity, we'll get more connected, and that's why I say penetration in South Africa, for instance, in our space is 35%, and I believe it will go to 100%.
What about Europe? Because I see you mentioned Europe amongst your areas where things are looking better, that order book is not looking unhealthy.
So we got good orders coming through in Europe. We got multinationals asking us to go into other countries in Europe at this point in time. So we are looking at opening up in France and in Germany. A lot of the German and the French multinationals are asking us now to open offices in Germany, and we would start off in Germany and France with already a good customer base that we already service in other European countries and in Asia. So the customers that exist in Asia that are German companies, French companies, and they're asking us to open up in their home countries.
Sounds like the world is your oyster, right?
I wouldn't say that. I think it's very difficult. It's easy on Excel spreadsheets. It's a lot of work, and it's tough.
Where is your operating profit margin now?
It's in the region in the 30s. It's been traditionally between 30 and 35%, and it's been tracked in that region for a long time.
Yeah.
At the moment it's 34. I don't look too much at that because it will fluctuate between 30, 36%, 32%, and that really depends on what we do in terms of R&D, what we do in terms of distribution.
Yeah.
And it's not always about just improving the operation model, it's about sustainability and growth, generating good cash flows, and having a sustainable business is more important than whether you're 32 or 34 or 31 or 35.
Yeah. So I raise it because your last line in your outlook statement reads, while subscriber growth and customer service remain the primary focus, cost rationalization strategies will be implemented to leverage subscriber growth in order to increase operating profit and margin. And I'm thinking, if you're sitting around 34%, you're brave to come in and say you can further improve that.
Yes, we've, I would say in the last year, we've spent a lot of money in distribution. And when you spend a lot of money and you're growing the business like we have been going, there's a lot of mistakes that you make. There's a lot of money that you've spent that you can start rationalizing. And we're in the phase now for the next 6 to 12 months where we're going to be rationalizing that so that afterwards we can enter a more accelerated, I'm not sure the word more accelerated exists, but even a faster accelerated. So we've got really good growth, and now we need to rationalize and make get the company a little bit more efficient.
I don't know how to read balance sheets more closely than other people, but we keep hearing this thing that South African companies are sitting on R1 trillion of cash on their balance sheets. They are unable to deploy it because the environment is not quite as appealing. Are you one of those? I didn't look at those numbers to see if you are sitting on some cash here.
No, we're not sitting on cash. In actual fact, we've got a bit of debt, and so we haven't got cash. And in actual fact, for growth, we probably have to borrow money from the financial institutions.
Absolutely. Zach, thanks for coming in today.
Thank you very much, Godfrey.
And all the best. That's Zach Callisto, CEO and founder of Cartrack.